In your markets news, Asian markets have managed to make a remarkable comeback after what was deemed by many as a bloodbath at some of the most consequential indices on the largest continent. Nikkei is up 11% today after falling 12% yesterday. In the U.S., major U.S. stock indexes ended sharply lower at close of business trade as U.S. recession concerns followed last week's, including Friday's soft U.S. payroll data report, shook global markets and drove investors out of risky assets. That strength manufacturing activity in the world's largest economy added to worries following recent disappointing forecasts from the U.S. biggest technology company. Apple shares fell after Berkshire Hathaway halved its stake in iPhone maker. Billionaire investor Warren Buffett also let cash at Berkshire soar to $277 billion. Indexes pared losses after data showed U.S. services sector activity in July rebounded from a four-year low amid a rise in orders and employment. The S&P 500 lost 3%, while the Nasdaq Composite declined by 3.4%. The Dow Jones Industrial Average fell 2.6% to 38,703 points. The JSE is mixed at this hour. It paid strong initial losses to close about 1.2% down at 79,578 in previous trade. This was its lowest since early July, in line with major bourses. A fresh PMI survey that was issued yesterday in South Africa's private sector showed it remained that it's stuck in contraction in July, marking the second consecutive month of declines. The all-share index down is down 0.4% at this hour at 79,224. The rand is currently trading at 18.51 to the dollar, 23.49 to the pound, and 20.20 to the euro. Gold is trading at $2,411. Platinum is at $908 per ounce, while the price of Brent crude oil is at $76.86 a barrel. Our market commentator today is Simpiwe Letlojane, who is an investment strategist at ABSA. Thank you so much for making time to speak to us, Simpiwe. Obviously, following yesterday's turmoil, things have really retreated and things seem to be getting back on track. But take us through yesterday about what made the market so nervous and causing a wide sell-off.
Yeah, definitely was a difficult day in the markets yesterday. So quite a bit of volatility across board. So volatility indicators also rising and currently sitting at fairly elevated levels. I think really the key underpin here is that, markets have had quite a good run thus far. And valuations were starting to appear a little bit stretched, especially if you're looking at some of these technology sectors and some of the markets and pockets of the markets that were fairly stretched from a valuation perspective, as markets were really pricing in quite a lot of positivity, pricing in a soft landing scenario. And so when we're starting to see some disappointments in terms of, the macroeconomic data that is unfolding, we're seeing market reactions on the downside being more pronounced to negative surprises as opposed to positive surprises, because a lot of that has already been priced in. Then, of course, we did see some developments when you're looking at the Bank of Japan there. We did see some hawkishness in them hiking interest rates, and that affecting, some of the carry trades that have been implemented by investors there, where they've been borrowing in yen because of low interest rates and finding investments elsewhere, but now having to essentially have some liquidity requirements in order to fund for those slightly higher borrowing costs.
Yeah, I'm glad that you are touching on the Japanese markets because, as they describe it here, it was a bloodbath. And to see those indices recovering, it's really encouraging. Perhaps tell us about the significance of us looking at the Asian markets, particularly in Japan.
Yeah, we've seen quite a strong recovery today because really fundamentally what we are seeing is that it is more about positioning and, a liquidity requirement in the markets rather than the actual fundamentals of companies within the Japanese Nikkei necessarily being under pressure. And of course, the yen volatility also affecting the counters there because it is mainly an export-led economy. And so, any currency volatility can have quite an impact on, some of the counters there. But fundamentally, not a lot of concerns except for the fact that increased borrowing requirements does So increased borrowing cost does mean that, investors do potentially have to close out some of their positions in order to fund that. And that has resulted in some profit taking, especially with where markets are currently.
Yeah, let's come back home, Simpiwe. Rotary is very happy. A third successive fall in the price of fuel. I know that I'm excited about that. This is obviously good news for motorists. How do you see it?
Definitely is, and it's a much welcome reprieve for constrained consumers. So seeing fuel prices easing, and they have been easing for the past couple of months. And what's also quite important to bear in mind is that we have seen global oil prices anchoring lower, so falling below the 80 USD per barrel mark, and that, of course, does prevent further tailwinds to fuel prices in the future, and also provides, tailwinds for overall inflation. But of course, what we do have to bear in mind is that there is a little bit of volatility as far as the rand is concerned, and that may moderately offset, the current weakness that we're seeing.
Right. Just a few minutes after I speak to you, I'll be speaking to the CEO of Netbank about their results, and they have announced that an 8% increase in profit. Take me through how you see, especially what they've said about the finances of their members or their customers, and how consumers are really constrained, and banks, maybe yourselves as well as ABSA, tightening lending because of the position of the consumer right now.
Yeah, fairly positive results from the company. So we're seeing, headline earnings per share growing by double digits, whereas consensus was expecting single-digit growth. And, one of the drivers, as you mentioned, was that we saw impairment costs beginning to come down slightly, and credit loss ratios also coming down, currently sitting at about 104 basis points. But what is important to bear in mind with Netbank is that they are coming from a position where they are relatively higher compared to peers, and also compared to the through the cycle ranges that management guides towards. So, tighter credit conditions, as well as, easing a slight improvement in some conditions locally, boding well for credit loss ratios. And then, of course, easing in interest rate environment going forward will also have a positive impact in terms of more relief to customers, and then, of course, improving credit loss ratios for banks overall.
Yeah. Simpiwe, this next topic about the Twoot system has a lot of South Africans quite confused about how much exactly is going to be landing into their accounts after everything has been deducted, whether it's tax and other transaction costs associated. The Reserve Bank is estimating that household expenditure is going to be boosted once the Twoot system is in place. However, there's a lot of confusion about how exactly it works, although a lot of companies have gone into pains in explaining, but it is quite a complex one. Do you foresee that household spending will indeed be boosted by this Twoot system, or will people start to refrain and think there's too much to lose in terms of tax, paying tax, etc.? I'd rather leave my money there. And also those who may be taking loans with the hope that they will pay back those loans using the money that they've gained from the Twoot system. Share your thoughts with me.
Yeah, definitely quite an important development as far as the industry is concerned. And even though, there are, indications that there may be, boost to spending from the Twoot system, what's really, really important to remember is that the main purpose of this regime is essentially to, address some of the shortcomings of the previous regime, where essentially there were two opposite ends, where members didn't have access to their savings unless, of course, they undergo a resignation during periods of financial strain. But on the other side, where they essentially had, once they do that and go for that route, they essentially have access to all of their retirement savings, which risks the possibility of someone, taking too much withdrawals that can then be very detrimental towards their long-term, retirement plans in the future. So what the Twoot system is.
It looks like we have lost Simpiwe Litlojane. There was an investment strategist. He was explaining to us his views, particularly on the effects of Twoot with withdrawals, and he's so far shared some interesting insights. It looks like Simpiwe is back. I think we have him back. Our team has got him back. Simpiwe, please do finish your thoughts around the effects of the Twoot retirement system.
Thank you. So as I was mentioning that the core reason for this particular regime is to address some of the shortcomings of the previous regime, where you had two opposite ends, where during periods of financial strain, members didn't have any access to the retirement assets where they might essentially need those assets. Whilst on the other hand, you have a situation where the only way that someone can access those assets is by resigning. And then also on the other side, they essentially had access to pretty much all of their retirement assets, risking the possibility of withdrawing those in entirety, and also risking the more longer-term impact of that on their retirement plan. So what this really does try to do is give some people access to a third of their savings at any point in time, whilst making sure that 2/3 are always preserved, so that over the longer term, for retirement planning purposes, there are funds available for someone to be able to buy as much income as possible. And then also what's important to bear in mind is that 1/3 that is available, it is most ideal to only use that during emergency and financial strain situations, as essentially that pot will also still be serving the same purpose of trying to provide for your retirement in the future. And really the two pots, even though two separate and they have two separate rules, from an investment strategy point of view, we don't necessarily distinguish them, because they both still have the objective of providing for your long-term investment goals and your retirement.
Simpiwe Hlojane, investment strategist at Absa Investment, thank you so much for your views. And Simpiwe was our market commentator for today, giving us his views on a variety of things, particularly in the markets. And we're going to take a quick break. When we come back, I'll be speaking to Jason Quinn, the CEO of Netbank, about their latest results.